All right, guys. Good morning. Good morning. Welcome aboard to the Morning Note. Happy Friday, everybody. It is Friday, January 27th, 2023, here on the YouTube channel. Thank you so much for joining me today and every morning at 9 a.m. Eastern Standard Time. Love to do it with you guys. If you haven't already, make sure to hit that like button if you like these videos. Share them with any of your friends who like this kind of info. And of course, make sure to hit that subscribe button. Turn on notifications so you make sure you get that little notification right when we do our videos. Just wanted to give you a quick heads up. The top 10 stocks of 2023, that is finalized. We are set. I will do the video this weekend and I will talk about it with you guys. And then we'll show exactly how it did in terms of the 2022 stocks. And let me just give you a spoiler alert. Wasn't that great, obviously, with the stock market being down. But 2023 is going to be very thematic. We're going to do the thesis in terms of the top 10 stocks of 2023. And I already gave that information to Investment Club this week, actually. So they got this info ahead of time, obviously. But it's all about lower dollar, lower yields, lower inflation. So again, that's the theme. And we're going to go ahead and use that in order for our top 10 stocks of 2023. So that will be coming out on Saturday evening. I will make sure to post that during the day. And then finally I can chill and actually watch some football on Sunday. So I want to knock it out all by Saturday. What a week it's been. Okay, so let's go ahead and go over it. Dow futures down about 10 points. NASDAQ futures down about 60, down about 0.5%. S&P 500 futures down 0.34%. Russell down 0.28 at 1905. Crude oil futures up 1.38%. Gasoline futures up 0.81%. 10-year Treasury yields slightly up 3.522%. Dollar index, again, still kind of hovering around that level of around 105, 101 and a half. So again, we do want to break that so we can get to the 100 level. So that's where we are. It's up about 0.12%. The VIX is at 1882 this morning. That is up 0.48%. Gold futures are flat, 1947 an ounce. Silver futures 2368, down about 1.39%. Copper futures 0.33%. So we can see that the commodities are taking a little bit of a hit due to the dollar, with the exception of really crude oil. Let's take a look here. Euro dollar down about 24 pips, 108.66. Dollar yen 129.64, down 61 pips, 123.73 on the pound dollar. That's down 42 pips, 23,110, down 1% for Bitcoin futures. Ethereum futures at 1580. That's down 2% this morning. Okay, let's go ahead and go quickly with a quick update on the S&P 500. Of course, as I always start, we talked about yesterday that the target I'm looking for is really 4,100. I even tweeted that level, and that's where you pretty much want to be selling, if anything, maybe taking some profits on some longs, because we may be hitting that zone of resistance right around 4,100, 4,150 or so. So again, we're pretty close. We're about 40 handles away. That was my target. Again, that is the level that we got to in December. That's the December CPI number, and then we had the fall due to Powell. So again, I just kind of want to update that. And the reason I'm saying that is because you have 1, 2, and then now you're going to be in your third. So again, kind of a triple top here. You can see it right around 4150, 4170. I think 4100 will get a little bit of volatility. We'll probably reject with FOMC if we don't get the pause. I'm expecting a 25 and pause. I'll make sure to reiterate that ahead of the number. I may be wrong, obviously, but again, that's just what I'm thinking. If we do reject 4100, really the next level for support, guys, moving forward would be 4000. So again, just keep that in the back of your head. I didn't trade it yesterday at all. I got out of my SPY position. I got out of my Microsoft calls. So again, well done, team. There's no reason to do anything else. We actually just were watching yesterday as we saw the market go higher in the morning and then chop around a little bit. But we ended up higher with the push. I want to go ahead and go over something very interesting. For me, this is the chart of the day. This is the S&P 500. I sent this over to Investment Club. I even tweeted this out yesterday afternoon. I want you guys to go back to 2020. 2020, that week, this is a weekly chart. This is starting the 2nd of November 2022. November 3rd is when the election day happened. Granted, keep in mind, we did not have an announced winner, I think literally till that weekend, in regards to President Biden winning the election. This is interesting, and I saw it, I'm like, I couldn't believe it. Now, again, I just want to reiterate, My bottom is 3,500 S&P. We called that in October. We told you guys that hasn't changed, but there's something that may just strengthen that argument, and I just found it out yesterday. Here is the stock market, or the weekly candle, and where we closed right around 34.95 on the S&P 500 on November 2nd week. That's election week. 34.95. Keep that number in mind, 3,500. We got as high as 48.08 at the peak of January 2022. We pulled back to where? The election day 2020 level at 34.95, 3,500. Did we just retrace all of the election day gains and now bouncing back? Now, granted, that is a theory. I still say 3,500 support, but man, does it make sense. It makes a lot of sense, actually, if that's the support level. And the reason that we had that, our support level, was because that was a 200 moving average on the weekly. Very, very big key level. So again, I reiterate my bottom call. We're still at 3,500. Yes, we bought at the bottom. DCA, if anything, was just by G. But again, we were trading off that, and we've been trading that ever since. So really, when things would change, when you would say, I think most people would say, yeah, the bottom's already in, I would say around 4,400. 4,400, then most people would be like, yeah, the worst is over. And the reason I would say that is really because we've been just chopping around really since April. Just been a big old fat range here. But if you get to 4,400, I think most people will be like, wow, it's over. We did bounce, yada, yada, yada. What we're trying to do is trade around it, obviously, and I'm waiting for one little thing there, one little thing that I really want to come up. And again, it's very, very important, and boy, are we close. The 50-day moving average to break above the 200 moving average, that's your golden cross. To me, that's my signal to actually add a little more risk on the table, to start trading and actually stick to that momentum of upside calls. If that's the case and we do get that golden cross, 4,300 is my target by end of the year. I think we tap that probably by April if we get that golden cross. So I'm a little worried that my view, or my consensus view, our consensus view, may be a little too conservative. We may get to 4,500 possibly. I don't think we stay there. I think 42, 44, 4,300 will be our next support, which would make a lot of sense. Resistance becomes new support. So again, maybe we get a nice overshoot, not in one day, but a nice overshoot to 4,500. We reject, stay in this range of around 4,300 to 4,500. As you know, stocks just don't go straight shot up. We still need a lot of good news. I will go over that more into the top 10 stocks of 2023 this weekend, when I actually break down why I like each of them. So again, I'll go into a little bit more detail of what I'm saying. So we'll kind of do it as the hybrid of the top 10 2023 and kind of a speak of what I expect for the rest of the year. Now, granted, I already did this video for Investment Club. If you prefer to watch the Investment Club video, Discord members, if you're a masterclass or Investment Club member, go to the Investment Club alerts section on Discord. I'll go ahead and show you if you have not seen it already. I think most of them have seen it. You go to Investment Club alerts, and the video is right there. The 2023 Investment Club thesis: lower dollar, lower yields, lower inflation. That was sent out on the 22nd, which was this weekend. So again, I'm not going to do the exact same video for that. That's more for Investment Club. But the top 10 stocks of 2023, again, is a reiteration of the actual thesis moving forward for 2023. So you'll probably get the gist of it. But if you really want the full detail on what do I expect moving forward for the new year, it's on Discord as an Investment Club. If you're a basic member today, or you're just a premium member, make sure to sign up and become an Investment Club, because hey, things will start moving and we're ready to rock. So a lot of the members on Investment Club are getting a little bit of FOMO. They're very, very excited, and I get it, but I'd rather be correct. Let me just be right. I don't need to be first. So again, let's wait for that golden cross of the 50 above the 200 day, and then we could start making our decisions on what we're going to do moving forward. But very exciting times. Or this could be just a complete bear trap, and then we reject 4,100 with the Fed again, and then we'll get back to 3,800 and back to square one. Risk is important. Risk management is extremely important. So again, it's good to see both sides before you do anything. So that's my chart of the day. Real quick, in terms of the PCE, which was the number that came out this is the Fed inflation kind of gauge, and that came in better than expected. I'll go ahead and read it to you. Core PCE index met expectations of 4.4. The previous reading was 4.7. Core PCE index met expectations 0.3%. PCE price index month over month came up 0.1%. Forecast was 0. Real personal consumption down 0.3% versus the forecast of 0.1%. Personal spending negative 0.2% versus a 0.1%, and personal income came in and hit expectations. So all of that PCE number that we got really didn't affect the markets as much today. I mean, you're getting a little bit of a pullback for the most part, but again, I still say we get to 4,100, and then I think we will reject that at least for a short term until we get to the Fed meeting on Wednesday at 2 p.m. the FOMC. So we'll be ready for that. So again, all I'm expecting here is to get around this level 4101, maybe 4088, and then we'll probably check back here. As long as we hold 4023 on that trend line, I think we should be okay. Key level to watch for the week. Again, the weekly close, extremely important. 4034, 4029. Okay, that's the 50-week moving average. That was a very, very tough nut to crack because we have not settled above that, even with the December CPI nice move. We broke above it, but we have not settled above it. If we can get that weekly close at 4032, then it becomes very, very exciting for the bulls. But as you can see, the last time that we settled above that was back in April. So I'll go ahead and tweet that chart for you guys here in a second so you guys don't forget it. Very, very important stuff. Let's answer some questions this morning. Okay, good morning, Carlos. What are you expecting from AMD NVIDIA earnings? I think they're going to do better than Intel. Thanks for your diligence. Young Danny, thank you for the question. The issue with AMD and NVIDIA, they are, of course, obviously outperforming Intel. I think NVIDIA, you have to look at it in a different prism than we do just regular semiconductors. Obviously, NVIDIA is a little more of a growthy name in terms of the regular semiconductors. I would equate NVIDIA being more of a growth stock than a Qualcomm or an Intel. Intel's more of a value trap maybe, or a value stock if you want to call it. They do pay a dividend, actually. But NVIDIA is obviously getting into autonomous vehicles, AI. We know with ChatGPT, maybe NVIDIA gets a little more of a bid. I like semiconductors for the year. Just keep in mind, that's one of our top 10 of 2023. I like semiconductors. I love AMD and NVIDIA. But again, the earnings, it's very, very important. The one thing I want to look for is the guidance. I want to know about their guidance. I want to know if they're going to do any buybacks. Those are really the two factors. Remember, all we're pricing in now in terms of the stock is the last quarter. Last quarter, we know where we were in the fourth quarter. Still slowing, interest rates rising, consumption was slowing. So again, really where you start getting the change, guys, is going to be the next quarter. That's kind of the big one. The Q2 earnings reports will give us the reading for Q1, the first 3 months of this year, with looser monetary policy, not monetary policy, looser financial conditions. We're seeing rates go down. We're seeing the dollar go down. Remember how big of a tailwind that is, especially for AMD and NVIDIA. So if they do well, that's going to be a great sign. But I think AMD and NVIDIA, if they do dip, may be a buy the dip scenario. Now let's go ahead and chart both of them. And the reason I say that is if we go to the weekly chart, we are now above the 200 MA on AMD on the weekly chart here. So again, very, very key support level. I have a level to break of 77.12. If that breaks, I want to go ahead and get into the 80 calls for next week, play a run up into earnings. Right now, the stock is down this morning. So again, if we can get above 77.12, maybe get back to 75, I'll take a look at possibly catching that run up into earnings and then sell it like we did with Tesla. Now, obviously, I didn't hold Tesla for the earnings, but we played it right by playing the run up to it. I think that's probably the most prudent way to do it with with AMD this go around. So I would keep that in mind. Look at this chart on NVIDIA, beautiful breakout of this channel. Again, we need a little momentum for it. And again, I am a shareholder of AMD. In terms of NVIDIA, look at the weekly chart. We are now above the 100-day on 100 weekly moving average. So the next target I have is 204.06. I think if you break 204.06, that's pretty much your target level to buy. And then if you do buy that, you're targeting about 229.17 as your resistance one. And again, I'd highly doubt we'll get this by the end of the year. 285.73 will be the next target. I'd hold my horses there. I would say around 229 is a good baseline for NVIDIA by end of the year. That would be my price target, but you got to get above 204. That would probably net you about a 10% return on NVIDIA. Not too great, not something to celebrate in terms of owning the stock, but again, it'd be a nice catch. So I love both for the fact that they're more growth oriented and they're going to be more beneficiaries of lower rates than an Intel would, than a Qualcomm would. Those are more value based because of the dividend. NVIDIA pays a dividend, but it's a very marginal one. I hope that helps. Brano's asking, do you think it's a good time to sell MRO? Marathon Oil, I don't know if they had their earnings report yet. Chevron posted their best best profit for the year ever. Now it gets to the point, guys. Has it gotten too frothy? Has it got to the point that have we hit peak oil, at least short term, in terms of these companies? You know, energy, everyone loves it, but again, is it something that we're looking for the future? I did not put any energy stocks in my top 10. And again, this is a name like XLE and XOP that we've been talking about since 2021 with the grand reopening thesis. And when we talked about from buying stuff to doing stuff, we knew that energy was going to go higher. Investment Club went long XOP. We went long CVX. So again, the only one we really missed in that sense was the Warren Buffett darling of what was that energy company that he bought? Let me see. I got to look it up. Now I'm going to forget. Buffett energy stock. I know it's going to come up. He bought, oh God, I can't believe I forgot the name. Let's see, Oxy Petroleum, Oxy, before someone tells me. So again, other than Oxy, I missed that, but I did trade Oxy, mind you. XLE, you could see it right here, 93.31. So again, this is going to give us the big view of the XLE, which is the ETF for energy stocks. Now again, they are hitting to the point of just beautiful levels in terms of maybe possibly getting to, you know, multi-decade highs of $100. Would I be a seller here of energy? I wouldn't be a buyer here if it pays a dividend. So again, I would just own it for the cash flow. But again, I think that we top out at $100 because the dollar continues to go down. Again, if you were expecting a recession, you definitely want to be out of energy because then the demand's going to wane. But again, you get to the point now, how much growth can the energy sector go? I mean, how much more oil can they move? Now, if you have the other aspect, let's say the war in Russia and Ukraine ends, energy is going to tank too. So again, I'm starting to see the risk reward here isn't the best. It's kind of very similar to you know, tech stocks back in 2021 where it was priced to perfection. We had COVID, lockdowns, everyone was buying computers. You may get a little bit of a actual correction on energy. Again, I'm not against that. Maybe you get back to around an 86 after tapping 100. Again, that would be a, what, 14, 16% move, completely natural and fine. I think that's where you're looking for to possibly look to position yourself in. I wouldn't want to buy energy here. I think it's just a little overshot in terms of overbought because we priced in perfection in 2022 for energy was the best environment for it. I don't hate energy, mind you. I don't hate energy. You can own it for the yield. But again, keep in mind, you're hitting to a point of a ceiling in terms of how much energy can grow because it's actually grown insanely since 2020, 22% to 93. I mean, it gets to the point, it gets a little frothy. So again, nothing wrong with owning a CVX, nothing wrong with owning an ExxonMobil for the yield and cash flow, totally fine. But have your expectations in check in terms of growth. This is not going to outperform tech this year, in my opinion. It's not going to outperform many sectors this year. You just had 87% growth in the sector last year. It's going to be very difficult to replicate that year over year, especially since energy on an average aggregate basis is nowhere near returns of 82% in a year. That's a completely different thing. That's when everything works out in your favor in terms of an energy investor. I would start taking a look at possibly taking some profits around the $100 level. What's up, homie? Heads up, Coinbase is hitting that resistance line. Oh yeah. Well, key level in terms of Coinbase, and understand this with Coinbase. Coinbase is going to move the way Bitcoin moves. So if Bitcoin goes up, Coinbase is going to go up. So here's the actual chart that we're looking for in terms of Bitcoin. Let me see if I can bring this up here. All right, here is, let's see, here we go. All right, here is Bitcoin, now trading at 23,058. If you want Coinbase to go higher, you're wanting Bitcoin to break 25,000. If you guys remember, we talked about Bitcoin gets more interesting above a key level of 20,000. We said that. But look at the RSI, obviously, 14-day RSI, overbought, totally fine if you get a pullback. What's going to be paramount, Scotty, in terms of Coinbase, crypto, Bitcoin, high betas, is one chart and one chart alone. The chart of all charts. The dollar index. If the dollar index falls, Bitcoin is going to rise. If Bitcoin is priced in dollars. Now, if you look at Bitcoin versus the euro, completely different chart. But the dollar is going to be the key. If you break 101.5, right now we're up a little bit, you're going to get back to possibly down to 99. You're going to see a pop into Bitcoin. If the dollar continues to fall, this is part of our thesis, lower dollar, lower yields, lower inflation, then you're going to start seeing these high betas, interest rate sensitive stocks start moving higher. I'm not saying you're going to get a redo of 2020 where, it was meme stock mania. A lot of retail investors got priced out and they dumped their stocks, and it's very difficult out there, especially if you have margin. Completely understand. But again, in my opinion, the worst is already over. The bottom is already in. The dollar has already gotten way ahead of itself. It's going to pull back to 99. That's the expectation by mid-year, if anything possibly sooner, depending on the Fed and what they say on Wednesday. We'll go ahead and obviously chart that. But this is probably the most important chart for all crypto holders. Is right here in front of you, Dixie. No words can portray or explain the historic collapse of Intel. Intel, what happened with Intel? The case of Intel is very similar to IBM. And the problem with Intel is that they tried to become what they weren't. Intel was an aggressive growth company back during the dot-com boom. PC sales, all that jazz. Intel even made chips for Apple computers. What happened with Intel is kind of the same deal with IBM. Stock buybacks, and dividend return. They became a value stock in a tech sector that's a growing sector. Again, it's all about growth. NVIDIA did it right by not paying a high dividend. AMD doesn't even pay a dividend. Granted, Qualcomm does. But Intel, if they would just said, hey, we're going to invest in the future in growth, not become a value stock, just paying back dividends, that's a lot of money. Verizon and AT&T are going through it too, paying out those dividends. It's nice to keep people in your stock, true. But again, those dividend payments come out very, very heavy. And the problem becomes on Intel that you're only owning it for the return. In a high interest rate environment, Intel does not do well because now they have to increase their dividend in order to attract new money with slow growth. Intel is not something you want to own here if interest rates continue to go higher. But if interest rates fall, it may give Intel a chance if they suspend their dividend. I don't know if there's any news on that, but if they do, I think it'll be a good reset for Intel, becoming a growth company. Maybe they do some mergers and acquisitions for the cash savings. I'm not an activist investor. I'm not going to go into Intel's board or anything. But man, look at this. If we go to a weekly chart, weekly chart's very, very ugly. We'll go to the max chart here. We still got more to go. Probably down a $20 stock, if anything. I think $20 becomes very compelling for an Intel if you're looking for possibly someone buys them out or an acquisition, sure. I don't think 20 happens tomorrow, but again, that's really your target, right around $20 a share. But Intel is a good case study for finding the identity of your sector and sticking to that versus changing everything. Apple's is becoming that too. Apple's still a growth company, but their stock buybacks and everything like that. We understand, it's a value-centric point of view in terms of keeping shareholders. But again, Apple still needs to keep in mind they're still a growth company. They're not as bad as Intel, but Intel's pretty much stuck, and they're kind of in that same boat of a Cisco, of an IBM, and an Intel being part of that group. Kind of that value trap. They used to be growth, but they hit their growth peak, and then now you're pretty much looking for a cheap price to speculate. Good news, good morning, Carlos. Thanks for your service. I was wondering, how do you get the moving averages on TOS? Sure, pretty simple. You just expand this here. You can go to studies, you go to add study, you go to moving averages, and you go to simple moving average, and you can add whatever you want, how you want it. So this one was the 9-day. You right click it, edit study, 9-day. Again, I don't need it, so I'll go ahead and delete it. So remove that study. So simple. You go to studies, add study, moving averages, right here to simple moving average. Easy stuff. Put on market averages. Yes, that's exactly what I did. Thank you, Gio, for the question. Henry, thank you so much for the question. Thought on Meta's current price too high to get in. Meta reports next week, I believe. So again, I'd wait on it. I have traded it this week. Well done, team. The next target on Meta will be 153.35, which is your 200-day moving average. If you break that, you're taking a look at this gap fill right around 167.28, which is right there on the daily. In order to get there, we need to break that 200 moving average, and then I would take a look at possibly the 170 calls. More than likely, that'll be after earnings. If we can play a run up into earnings and get that break, who knows? But Meta still needs more. I want to go ahead and break above 153.35 and then fill that gap. And after we do, and if you're looking to buy it, it's still not ready yet. Again, unless we have some clarity with the Fed, I would go ahead and see if they get that break. If it holds 154.25 support and kind of stays around 180, 158, I think that's probably one of the better plays in terms of a turnaround, because you have a crazy gap here at 316. Not saying it'll fill this year, but it'll give you an opportunity to maybe get a couple points to the upside and ride that momentum. Today, a call or more of a restable put today. I would say today is just sit on your hands day. If things start breaking out, fine. You're playing a run up into earnings. You need to be out of your trades by Wednesday afternoon. That's all you're doing now. What I'm expecting in terms of today's action is 4,100 on S&P 500 and a rejection. That's it. That's all I'm expecting. Get me to 4,100, and that's where you're getting out. And then you see 4020, 4,000 as support. Again, just another check back like we said we were going to get back on Wednesday. Same old deal. We're going to get up, we'll check back, we'll get back up. And again, that structural set of higher prices in the stock market, it's being consistent. You're not getting spikes. You're getting nice rechecks, checkbacks as we go higher. Hey, what degree do I have? No degree. I am a college dropout. Just curious, Gar. I'm going to study a trade, but I want to pursue day trading. Again, we teach day trading for you guys, but no, I don't know if there's a college class for it. I went to college first as a history major and then a business administration degree, and I dropped out. And I learned this pretty much on my own. Just reading books in my bookshelf and reading anything I can get my hands on. I have 3 magazine subscriptions, including Bloomberg, and I read every day. I would say on aggregate, I probably read about 3 hours a day. Just everything I can get my hands on. If you like doing day trading, get used to reading a lot, because news matters. And shows like this on YouTube help, of course. Do you have a real estate license? I do not have a real estate license. No, sir. I actually personally hate real estate. The only property I own is my home and some property in Colombia. That's it. I own my own home and property in Colombia. I don't own any rental properties or none of that stuff. Again, I concede to real estate experts out there. For example, some of our followers, they like when I post in terms of real estate and in terms of interest rates, because it's beneficial to educate others on that rates are going down and things are getting a little better. So again, if we start maybe hitting 5% on a 30-year, there's some mortgage brokers out there that are friends of ours on Instagram. Again, followers, they're the ones that probably you can ask some questions about helping you out with refinancing your home. I'm not going to, because I locked in my rate at 2.8% in 2021. So I'm happy with that. With that being said, I'll let you guys go. Have a great rest of your weekend. I will get you guys the top 10 stocks of 2023. How exciting. I will see you guys on Monday. Playoffs this week, championship game. Give me Burrow and the Bengals. Give me the Eagles for the win. And we'll see what happens. Have a great rest of your day, guys. Enjoy your weekend. Cheers all.